The banks are lying to you. Right now, behind closed doors this weekend, regional banks across the country are desperately trying to patch massive toxic holes in their balance sheets before the markets open on Monday morning. The Federal Reserve is quietly engineering a shadow bailout, and the mainstream media is completely silent. If you are holding all of your wealth in the traditional banking system, you are sitting on a ticking time bomb. Do not click away, because today we are exposing the exact data that proves the next great banking crash is already here, and we will show you exactly why you need to move your money before Monday. Hello everyone, I am John Agee, and welcome back to the Wealth Reactor. If you want to survive the coming macroeconomic storm and protect your family from the collapsing fiat system, you must stay one step ahead of the institutional money. Make sure you hit that subscribe button and ring the bell icon so you never miss an urgent market alert like this one. Let us dive right into the hidden data. Let us start with part 1, the shadow bailout and the illusion of stability. When the banks collapsed in 2023, the Federal Reserve stepped in and created emergency liquidity facilities to stop a total systemic contagion. They told the public that the banking system was sound and resilient. They told you that your deposits were safe. But what they actually did was put a massive bleeding wound underneath a temporary Band-Aid. Right now, the banking sector is sitting on hundreds of billions of dollars in unrealized losses. When you deposit your money into a bank, they do not just lock it in a vault. They take your money and they buy long-term treasury bonds and mortgage-backed securities. But because the Federal Reserve aggressively hiked interest rates to fight off the inflation that they themselves created, the value of those older, low-yielding bonds completely collapsed. If these banks were forced to sell those assets today to give you your money back, they would be instantly bankrupt. They are fundamentally insolvent on paper. The only reason their doors are still open is because of accounting tricks approved by the central bank. They are allowed to pretend those assets are still worth 100 cents on the dollar, as long as everyone does not ask for their money back at the exact same time. But the smart money is already quietly heading for the exits. Which brings us to part 2, the commercial real estate time bomb. The unrealized losses on government bonds are only half of the nightmare. The real systemic killer that is going to take down the regional banks is commercial real estate. Across the entire country, massive luxury office buildings, shopping malls, and commercial complexes are sitting virtually empty. The work-from-home shift permanently broke the commercial real estate model, and property values have plummeted by 40, 50, and sometimes even 60% in major metropolitan areas. Who holds the loans for these massive failing skyscrapers? It is not the massive too-big-to-fail banks. It is the small and mid-sized regional banks, the exact same banks where millions of regular people hold their checking and savings accounts. Over the next 12 to 24 months, trillions of dollars in commercial real estate loans must be refinanced. But they cannot be refinanced because the properties are practically worthless and interest rates are far too high. The borrowers are simply handing the keys back to the banks and walking away. This means the regional banks are suddenly forced to absorb massive, catastrophic losses that wipe out their entire equity capital. This is not a prediction. It is a mathematical certainty that is playing out on bank balance sheets right this very second. The dominoes are already falling, and the regulators are desperately trying to organize forced mergers over the weekend to hide the failures from the public. This brings us to part 3, the weekend seizure risk and the bail-in reality. You might be asking yourself, why does Monday matter so much? Why is the weekend the most dangerous time for your wealth? You have to look at the history of bank failures. The Federal Deposit Insurance Corporation, or the FDIC, does not shut down a bank on a Tuesday afternoon while trading is active. That would cause instant, uncontrollable panic across the entire stock market. Instead, they wait until Friday evening. After the markets close, the regulators quietly walk into the bank headquarters, seize the assets, lock the doors, and spend Saturday and Sunday frantically trying to sell the dead bank to a larger institution. If your money is trapped inside during a weekend seizure, you lose complete access to your liquidity. You cannot pay your mortgage, you cannot buy groceries, and your business cannot make payroll. But the nightmare goes much deeper than just temporary lack of access. You need to understand the legal framework of a bail-in. Under the rules established after the 2008 financial crisis, your deposits are legally classified as unsecured loans to the bank. Let me repeat that. Your money is not actually your money once it enters the banking system. You are an unsecured creditor to a heavily leveraged casino. If the bank fails and the FDIC insurance fund is depleted, which it absolutely will be in a systemic crash, the law allows the bank to confiscate your deposits to recapitalize itself. They take your cash and they give you worthless shares in a bankrupt institution. This is the ultimate wealth confiscation, and it is entirely legal. Now we must look at Part 4, Institutional Hypocrisy and the Apex Hard Asset. So, what are the massive institutions and central banks doing while they tell you to keep your money in fiat currency? They are aggressively buying hard assets. Central banks around the world have been buying physical gold at a record-breaking pace not seen since the 1960s. But while gold is the ultimate central bank reserve asset, physical silver is the apex predator of the retail and industrial market. As we have discussed extensively on this channel, the global physical silver market is in a severe, multi-year structural deficit. The East is draining the West. The solar and artificial intelligence industries are devouring millions of ounces, and the refineries are literally shutting down because they cannot secure enough metal. When the banking crisis breaks into the mainstream headlines, and when the public realizes that their digital checking accounts are nothing more than empty promises backed by a bankrupt government, panic will ensue. Millions of people will simultaneously attempt to pull their capital out of the system. They will run toward hard, tangible assets that carry zero counterparty risk. Silver is the ultimate asymmetric bet against a collapsing banking system. It exists completely outside the digital matrix. When you hold a 100-ounce silver bar in your hands, you do not need a password, you do not need an internet connection, and you certainly do not need the permission of a bank teller to access your purchasing power. If a bank closes its doors on a Friday night, your physical silver remains completely untouched and incredibly valuable. But here is the absolute most critical part of this equation. Because of the ongoing refinery crisis and the massive physical shortages we are already seeing, there will simply not be enough physical silver available for the masses when the bank run happens. If you wait until Monday morning, when the news is already breaking and the panic has already started, the local coin shops will be completely sold out. The online bullion dealers will suspend trading. The premiums on physical metal will skyrocket to double or triple the spot price. Which leads us to the final verdict. You must act as your own central bank. The era of trusting heavily leveraged financial institutions with the entirety of your life savings is officially over. You cannot wait for the government to announce the crisis, because by the time they admit it, the exit doors will already be bolted shut. You must ruthlessly audit your exposure to the banking system today. Keep only what you need for immediate living expenses in the digital fiat system, and systematically convert your excess capital into high-purity, physical monetary metals. Sovereign-minted silver coins and large investment-grade bars are your ultimate financial shield. The greatest wealth transfer in human history is accelerating. The middle class is being systematically wiped out by inflation and banking instability. But those who hold tangible assets will not only survive, they will thrive. You have a very narrow window of time to move your capital out of the danger zone. Do not wait for the market to open. Do not wait for the panic. Thank you so much for watching this urgent market breakdown. If this video helped open your eyes to the reality of the banking system, please hit that subscribe button, smash the like button so this warning reaches more people, and turn on the bell icon. Let me know in the comments section below if you have already started pulling your capital out of the banks and moving it into physical silver. Stay safe, stay relentlessly prepared, and I will see you in the next video right here on the Wealth Reactor.